Hey everyone, welcome in to another daily editorial here on the KE Report. In this daily editorial, I'm going to focus almost exclusively on the silver market, more macro factors that are continuing to push silver, unfortunately, a bit lower, now under $20. I am chatting with David Stein. He is the president and CEO of Kuya Silver. Now, we're not going to be talking too much about Kuya, but Kuya is traded on the CSE under the symbol KUYA, as well as the OTCQB under the symbol KUYAF. Now, David, silver, big picture, has been under some pressure here. Silver, for the most part, almost 2 years, was trending in more of a channel from lows around $22 up to about $30. More recently, though, unfortunately, silver has broken down below some key monthly moving averages, and I think even more importantly, below that more psychological level of $20 an ounce. It really is just back at trading ranges or the levels that it was right around pre-pandemic when it was generally trending higher. What do you think are the key drivers, the key catalysts that have pushed silver now below some of these technical levels and below $20 an ounce?
Well, thanks, Corey. I think the big picture, we're in a market that is in general selling off of all risk assets. We're in a market where the leadership is changing, but the leaders of the next cycle haven't really been fully identified yet, and so a lot of that capital is going, at least temporarily, into the U.S. dollar. So U.S. dollar's been really strong. I think that's put a bit of a weight on gold, and as a result, an even bigger weight on silver. If you recall, and I'm not sure if it was with you but I certainly talk about this quite often, which is that silver. Looking at it first and foremost, or I look at it first and foremost as a monetary metal, although there is a lot of interesting things happening on the industrial demand side. But as a monetary metal, it's tracked gold's move in the longer term almost to a T. I think the correlation's over 80%. And however, when the precious metal market is bullish, or when the gold market's bullish, silver tends to overshoot to the upside, or it tends to outperform gold, and vice versa on the downside. And we haven't had a big move down in gold. It's been actually pretty steady, but it's definitely been trending down in the last few months since the Fed started raising interest rates. Silver's taken sort of an even bigger share of that beating, and I think that's mostly what's been driving it. Maybe there's a little hint of recession fears now in the market, and whether or not that will impact demand for silver, maybe slightly. I think more of silver demand is tied to very long-term, kind of more infrastructure. A lot of it is in the environmental infrastructure kind of realm of the industrial market. So I don't think it has a big impact in the short term. But anyway, that's sort of what I see right now. I think silver will reverse trend with gold at some point, and it will be caused primarily by macro factors.
Now, these macro factors, how much is the Fed and other central banks playing into this? I know we talk, it feels like nonstop about the Fed and central banks, but this monetary policy shift that we've seen, that has been the biggest shift in over 2 decades, some people are even pointing to 40 years. How big is that in determining future direction?
Well, why the U.S. matters so much is because we're talking about the gold price in U.S. dollars, and the silver price in U.S. dollars. If you look at gold in other currencies, it's actually doing much, much better. Take a look at gold in yen. I don't have the chart in front of me, but my guess is that it's at an all-time high, or 20-year high, or whatever, excluding recent some of the previous spikes. But my guess is that it would be very, very high. And some of the other currencies, you'd see the same thing. So this is really kind of a U.S. led phenomenon. That's why it matters. The U.S. is tightening right now, even though I think most people don't expect that they will be able to tighten to the point where real interest rates go positive. Nevertheless, the trend is tightening right now, and that means where we're kind of seeing that is in the U.S. dollar strength, and the U.S. dollar strength, kind of ends up weakening weakening the gold price in U.S. dollars compared to other currencies. So, I think when they do a pause on the tightening, which that could be at the next meeting. Certainly, there's as the overall market weakens, and maybe I guess it'll depend on inflation a little bit as well. But certainly, I'm hearing some experts are calling for that. So we'll see what the language is in the next meeting. But I think that could play a big factor in terms of reversing the trend in the short term.
Now, what about the equities? Because the equities have just continued to underperform. I even felt like the equities underperformed when the metals shot higher. A lot of people were still saying, oh, the silver stocks, the gold stocks, they're pricing in just generally lower gold or silver prices. That again was to the upside. Now, when we're correcting in the metals price, these stocks have corrected even harder. Why do you think the stocks have underperformed so much? And are they telling us that these metals prices could still go lower?
Well, okay, here's where I'll have to discard gold now and just focus exclusively on silver because I haven't been following the gold equities that closely, and there's just so many of them. But I do know what's been going on in silver. Look, silver equities had a really, really good run in the late 2020 and into early 2021 relative to the metal price. I mean, we did have the metal price briefly touching around $30 during the silver squeeze, I guess, era or period. It was very short lived. There was a lot of interest in silver equities. So I think looking back now, perhaps they were all a little overvalued at that point in time. Now I think they've definitely gone the other way. I mean, the market has the broader stock markets peaked. I think it was early this year, and we've been now kind of in an official equities bear market. Mining stocks are equities as well, so they tend to get thrown out with the bathwater, and that's definitely what we've been seeing in the last few months. In terms of what they're telling us now, look, I think if you look at the silver index, which is not it's not a great index because there's actually a tremendous amount of gold exposure in it. It's less than 50% real silver, but it's very hard to make an index of only silver companies. So that's what they do. But anyway, if you look at that and sort of compare it to where the silver metal price has been over the last few years, you see that probably the index is pricing in more like a $15 silver price. Do I think silver is going to go down to 15? I don't, for a number of reasons. I think that that's now well below the cost of production versus 5-6 years ago, because inflation does affect the cost side of the mining industry as well. So that's something just to keep in mind. And so I think we're getting probably close to the lows now. To me, it looks like the equities are very undervalued relative to the metal price, even if it's $19 right now. I think the silver equities, for the most part, are undervalued. Now, they're not all undervalued to the same degree. Certainly, the bigger ones have held up a lot better. A company like ours, like Kuya, I think mostly due to our size, we've been, really, really heavily trampled on. So smaller companies like ours, when the fundamentals turn, we're going to go up a lot more in percentage terms. That's what usually happens. That's what should happen. That's what I believe will happen. So that's what I would sort of get positioned for. I mean, it's fine to buy one of the bigger, $1 billion, $500 million bigger juniors out there if you want. But they're definitely not as cheap fundamentally as you can get at sort of the sub $100 million level.
Yeah, it's very true. And now we're even seeing sub $10 million levels for some of these companies. It's just been one of those markets that pushes it lower. David, one thing I continue to hear out of the metals community is everyone referring to supply and demand. And I keep on hearing that generally supply is running out, or at least supply is decreasing. There are less new mines coming online. I keep hearing that there are less resources being found, although I feel like there are a lot of companies with defined resources right now that are trying to decide if they're actually going to go into construction or if they are going to be able to sell. How much do you think supply and demand plays into the big picture price wise?
I think it matters a lot in the long run, but not much in the short run. So let's first talk about the supply side. So biggest supply is mines. Mines take a lot of time to build, and even once someone makes a discovery and has a resource estimate, it can still be in a easily 5 to 10 years if everything goes well before that resource is actually in production and putting metal on the market. The supply side is very inelastic. There are sort of minor changes that mines can make, like increasing their grade or maybe doing an expansion, which usually is less risky, takes less time than a brand new mine started from scratch. So I think that's what you'll kind of start to see first, if or when we get into a bull market again. But we're definitely not seeing that right now. And remember, the mining industry, if you don't keep reinvesting in it, just the natural course of a mine, the production will tend to go down over time. Just the way mines are designed to pay back their capital, etc. Typically, you mine the best stuff early on in the mine life, and so if you're not, investing in an expansion or new mines, etc., the trend is going to be negative. It's going to go. That supply is going to go down. If you do nothing to make it go up, it's going to go down. So I think supply is probably trending down. It will take several years to make a significant impact to that.
What about the aspect of silver being viewed as a industrial metal versus a precious metal in good times when metals are moving higher, especially something like copper? Then look, a lot of people say, look, silver is going to do better because it does have that industrial component, but it still has that built-in precious metals component. Which one has a stronger pull, especially to the upside in your eyes?
Well, if you look historically at the data and the relationship between gold and silver, you'd have to say the monetary side is going to drive silver higher more than the industrial side. Silver is used for thousands of different things. It does have a pretty impressive industrial usage of silver that is consumed. So far, if you look at the last 40 years of the two metals trading, you'd have to say that the monetary side tends to rule the day most of the time. I think that, if that's where you sort of get that 80-20 relationship where 80% is tied to gold and 20% is something else. And that something else is probably the industrial demand. Now, I guess what is possible that we could see is that the industrial demand for silver becomes, due to new applications or rising use in existing applications, becomes even more important than it currently is, to the point where it could sort of tip the scales. And I definitely see that as being possible, and I'm more convinced of that now than I was a few years ago. For example, there's some research that's suggesting that solar panels, which have been using less and less silver per panel, really since they were invented, they're now having to use more silver in them in order to generate more energy. And the trade-off is actually it's worth putting more silver and having the solar panels cost a bit more if they can generate more solar energy. So that's potentially a big sea change because it's one of the largest uses of silver. It might be the biggest industrial use of silver, and that trend is changing right as we speak. And there's other things, electric vehicles, just because of all the electronic components in an electric vehicle, you need silver for all the wire connections, basically. It's the most conductive metal. It's got very unique properties. You can use it in very small amounts, so it tends to be used in a lot of really specialized applications like that. And that's something that is really a small component of demand right now, but could be huge in the next few years. So between that, the solar panels and other high tech and sort of ESG related things that silver is really good at, we could actually see a time in the next 5 or 10 years where the industrial demand is really driving the price higher. But right now, I don't see it.
So then, David, final comments then. As you view the overall silver sector, look, we're still right around $20, right? $20 is not necessarily a bad price. However, the trend has been lower, and well, the stocks, as we've outlined, have continued to drop even further and faster. Your outlook for the rest of the year. What are some of the key aspects that you're going to be watching that could signify a change coming?
Well, I think I'm going to be watching U.S. policy, and again, because that U.S. gold and silver price is really important. It's important for the sentiment. If you're in Australia and you're selling your gold in Aussie dollars, great. The price is going to be a lot higher, and your costs are in Aussie dollars too. So it's not necessarily, the gold price is not necessarily down there or in Canada or elsewhere, but the market sentiment is driven so much by the US dollar price. It's really important, I think, that we see that, especially for the stocks. And, that could be coming in the next few months once the market sort of fully digests the higher interest rates.
All right, David, thank you for these insights on silver. We've been talking a lot about precious metals and a lot about really just the macro factors because that is critical to understand, especially when I think some people get a little bit too focused on individual sectors, not seeing the big picture of, quite frankly, bear market this year, and it's been a slow, grinding bear market more than anything. David, when some more news breaks for Kuya, we're going to have you back on, outline some of those changes. And if anybody has any questions for David regarding the silver market or for Kuya Silver, feel free to email me, fleck@kereport.com. David, thank you as always for your time, buddy. We'll chat again soon.
Thanks, Corey. My pleasure.